Hello, welcome to another month of the Research Roundup. My name is Matt Hogan. I am a research analyst at Fidelity Digital Assets, joined today by my colleague Daniel Gray, also a research analyst for the Fidelity Digital Assets team. So let's jump right into it. So looking at our August Research Roundup, we're going to talk through some recent price action, some data we've been watching and focusing on, some of the FOMC decisions, and some macro-related data related to CPI and some of the decisions relative to interest rates going forward. We're going to talk through some of the top headlines from the month that's basically moving the markets and what some of the biggest news stories were from this past month, and then highlight some of our recent research reports in case you guys missed it. And so we're going to start with the year-to-date price returns. So looking at Bitcoin and Ether returns compared, Bitcoin is sitting around an 80% year-to-date price appreciation, with Ether sitting at around between 50 and 60%, around 55% year-to-date price appreciation. Throughout the month of July, we saw a lot of consolidation and sideways price action. Looking at the right side of this chart here, that's evidenced in some of that, price action there. And, I think that's kind of relative for where we are in the markets currently. And after the month of June, we saw some more volatile price action relative to some of the spot ETF filings that were announced with the SEC. And so as we await a decision on those, we have since cooled off from a price action standpoint and are chopping sideways at the moment. But still, Bitcoin at about 80% year-to-date price appreciation, and Ether around 55%. And so next, we're going to jump into some of the data we've been watching from this month.
Yeah, and so here we have the 200-day SMA, which analysts usually refer to for a resistance or a support level. And so if we look back in 2020, you can see here it acted as a support, and then we have a resistance here. And then after breaking this resistance in early January 2023, right around here, we've tested it twice, right? So we tested it here and we tested it here. And if we continue to trade sideways for the next month or so, like we're inevitably going to retest it again. But it's impossible to say whether or not we use it as a resistance, or we use it as a support and we stay above it, or we break below and we trade below the 200-day SMA.
Yeah, definitely something we'll keep an eye out on.
Yep. And then here we have some of the smaller wallets. So anything between 0.001 Bitcoin and up to 10 Bitcoin. And so what we've seen over the last 9 years is actually a fall of 14% of holdings for these larger wallets. So not pictured here, but from the all-time high in November 2021, we've seen a 4% drop of their holdings, which means they probably took some profits there and sold off. But at the same time, we saw these smaller wallets start to accumulate again and have been building since then. And so since that 9-year span, these small wallets have actually grown over 319%.
So how much of these small wallets, how much are they holding, Daniel?
Yeah, so currently I think they're around just under 18%, or maybe 3.5 million Bitcoin. And I think as prices remain around this level, we're going to see these smaller wallets able to accumulate more over time. And then another chart we like to use to show Bitcoin adoption over time is the addresses that aren't holding, or that are holding Bitcoin. So earlier this year, we saw a little tick here where the trend started to break and come down, but since then we actually see the trend starting up again. So this could mean new users are entering the market and accumulating Bitcoin.
Right, and we couple this with some of those small wallets accumulating, and we can continue to see that this trend has been up and to the right. Really at least since July July of 2017, between 2017 2018 there, steady trend up and to the right, which is something to keep an eye out on as well. And we've also seen volatility continuing to decrease. So looking at Bitcoin's 30-day volatility versus price, we see that volatility is really as low as it was back in 2020. Really, July or October of 2020, around that time, was the last time we saw volatility this low. And it's interesting to note that the price action in the following several months after that previous low was pretty bullish in nature, and so we saw pretty explosive price action there after those lows in volatility. Obviously we don't know for sure where the price is going to go. We don't know if it's going to go up, down, or sideways, but it is definitely interesting to note historically when volatility was this low previously, that it was accompanied by some upwards price pressure in the several months that followed it.
Yeah, and switching over to Ethereum for a second, this orange line here, this shows the maximum validator churn. And so what this simply means is how many validators can enter or exit the network at a time. And so we do some simple math here, which is basically taking the active validators and dividing it by a quotient of 65,500. So today we have about 700,000 active validators. Divided by that $65,000 number, rounded down, gives us roughly 10 validators per epoch that are allowed to enter and exit. And so here we have kind of like a step ladder where each time that this number grows, we're allowed to add more validators at a time. And so the interesting thing here is we've actually seen an acceleration of this churn limit. And so here we had was it 15, just under 1,500 validators allowed to join at a time. And then here we've shortened that, and then we keep accelerating. And so basically this means that validators are joining the network at a faster pace, which means that we're going up this step ladder at an accelerating pace. And so if we take another step up here around this 250 validators per day, if we accelerate again by September 19th, that will continue the trend, which tells us that people are excited to join the network, and they're continuing to stake on the network, which is healthy for Ethereum and their security.
Definitely. And then switching gears here over to the macro front, we had a CPI print on August the 10th, printing at 3.2% year over year, with that core number up 4.7% year over year. And so looking at expectations for the September FOMC meeting, the market is expecting that the Fed is going to continue to pause. So the current range is at from 525 to 550 bips, and almost 90% of the market right now is expecting that the Fed is going to stay at that range currently. And so I think this is something that's kind of interesting when you consider that we're still at 3.2% year over year from the headline CPI number, that core number at 4.7%, which is the same as the regular CPI less food and energy, as those are the more volatile aspects of that index, are really at 4.7% year over year still. And so when you kind of consider the Fed's target mandate of 2% inflation, we're definitely more than doubled that from that core number. And so it'll be interesting to see whether they actually do continue to pause, or if they throw in a couple more rate hikes in the future to address that sticky inflation problem. But then looking at the forward expectations for the December FOMC meeting, we have a September meeting coming up, November, and then December. So 3 more meetings before year end. But looking at the target rate probabilities for that December Fed meeting, even by year end, the market is still expecting that the Fed is going to pause and stay where we currently are from that 525 to 550 bips range, about 64% probability based on what the market is pricing in currently, that we stay at that range. Now, It's important to note that this is obviously subject to change. It definitely depends on a lot of different factors and what Jerome Powell and the Fed is saying. But it is interesting to think that the market is believing, at least currently, that the rate hikes will stop before year ends. We see that the market's pricing in maybe like a 5% chance of a rate cut before year end, and about a 28% chance of the Fed actually raising rates another 25 bips towards year end. So, with digital assets being, so reactive to liquidity in the markets and the Fed continuing to raise rates and suck liquidity out, it will be interesting to see, how these markets react to sustained higher interest rates for longer periods of time.
Yeah, and last up here for our data, we have a difficulty regression model, which we recently found on Glassnode. Basically, this difficulty regression model aims to average out the cost of producing a Bitcoin. And so if we pay attention to just the top portion here, this green line represents the Bitcoin price, and then the black line represents the cost to produce a Bitcoin. And so usually we find an equilibrium between the two, and these are always in flux. But currently we are the price is trading above the difficulty regression model, which simply means that it's cheaper to produce Bitcoin. And so if you look at this bottom portion here, this is just an easy translation to show you when we are above or below that line. And so if we look at currently, like I said, we are below the price, which means miners could be accumulating here, or they could be selling in profit and taking on more hash rate or more mining rigs, and paying for future costs now.
Certainly. And then some other highlights from this month. On the news front, the Federal Reserve launched an instant payment service called FedNow. Essentially, this is a 24/7/365 real-time settlement service. So it'll be interesting to see, where this goes and how this interacts with the digital asset market. Asset tokenization firm Securitize launched a tokenized real estate investment trust on the Avalanche blockchain. This is really interesting to see, kind of a real world example of securities and equities really being on chain in a real way. And so it is cool to see that there has been progress made on that front, and that this firm is specifically focusing on this, in the real estate space is definitely something to keep an eye out on. Sam Altman-backed WorldCoin project launched a polarizing WLD token despite some controversy. In WorldCoin, in order to get coins, you have to scan your eyeball with one of these orbs as a way of proving your personhood. And so there's been a lot of discussion among that and controversy whether that is an invasion of privacy, and whether that project is too centralized or not. But in other news, Gnosis launched a Visa card, allowing users to spend funds from their self-custodial wallets. Discussions over a comprehensive U.S. framework for stablecoin legislation is stalled, and a bug in code resulted in a $70 million Curve Finance DEX exploit, over 50 million of which has been recovered and returned so far. So another thing to keep an eye out on there. And outside of this, in case you missed this, some of our recent research report, I myself, Matt Hogan, released a Bitcoin scaling piece recently called Building on Bitcoin. And this piece mainly looks at the layer 2 solutions being built on and around Bitcoin, and basically looks at some of the scaling solutions that Bitcoin has historically had trouble addressing and is currently in the process of addressing and working towards in the future. I believe Daniel has been working on a signals report as well. This really looks at, a breakdown of some key market metrics that we're keeping an eye out on that could be affecting price and investor sentiment of assets, in the digital asset market. And so really this provides a breakdown of some of those metrics and signals, and hopefully provides some insight into into how to interpret some of those metrics and signals and what they may mean for the health of these networks going forward. So that's all we have for this month's Research Roundup video. Thank you all for watching, and we will see you next month.